We are today going to see a in-depth look into what is Bitcoin. It's a very tough topic to discuss because it's very abstract in nature. So let's look at what it is. So Bitcoin is a decentralized deflationary monetary revolution. It was launched in 2009 by an anonymous figure or group known as Satoshi Nakamoto. It is a groundbreaking digital currency that challenges the foundation of traditional financial system. As a decentralized monetary protocol, Bitcoin operates without central authority, is inherently deflationary due to fixed supply, and is designed to resist control or destruction by government and banks. This explanation explores Bitcoin's key characteristics, why it stands resilient against external interferences, and how it addresses the shortcoming of fiat currencies while offering significant advantages. Through data and real world examples, I will highlight the negatives of fiat system and showcase Bitcoin's transformative potential. So let's first understand Bitcoin. It's a decentralized monetary protocol. Bitcoin is a cryptocurrency, a form of digital money secured by cryptography. Unlike fiat currencies such as the US dollar or the euro, Bitcoin is not issued or regulated by any government or central bank. Instead, it functions on a decentralized peer to peer network where transactions are validated by a distributed group of participants known as nodes and permanently recorded in a public ledger called as blockchain. Let's see some of the key features of Bitcoin's decentralization. No central authority. Bitcoin's operation rely on global network of computers rather than a single controlling entity. This eliminates the possibility of a central point of failure or manipulation. The second is the blockchain is a transparent, tamper-proof record of every Bitcoin transaction. Once data is added, it cannot be altered, ensuring trust and security without intermediaries. Cryptographic security. Bitcoin uses public key cryptography, allowing users to send and receive funds securely while maintaining pseudo-anonymity. This decentralized structure is a bedrock of Bitcoin's resilience and its ability to function independently of traditional financial institutions. Now let's look at Bitcoin's deflationary nature because it's having a fixed supply. Bitcoin is designed to be deflationary, meaning its value is expected to increase over time due to limited supply and growing demand. Unlike fiat currencies, which are printed in unlimited quantities, Bitcoin is hard coded to a maximum supply of 21 million coins. So you might ask the question how Bitcoin ensures deflation. The first one is the mining process. New bitcoins are created through mining, where individuals or groups use computational power to solve complex mathematical problems. This process validates transaction and secures a network, dividing miners with newly minted bitcoins. The next one is the halving event. Approximately every 4 years, the rewards for mining a block is halved, reducing the rate at which new blockchain bitcoins are enter circulation. For example, in 2009, 50 blockchains per block, that is for every 10 minutes. In 2012, it is 25 bitcoins per block. In 2016, 12.5 bitcoins per block. 2020, it's 6.25. Current halving, it is 3.125 block, which is started in 2024. The next one is the supply cap. The halving process will continue until 2140, where the total supply reaches 21 million bitcoins. After this point, no new bitcoins will be created. So now let's look at the implications of its deflationary nature. With a finite supply, Bitcoin contrasts sharply with the cryptocurrency, with the fiat currencies, which are inflationary due to unchecked money printing. A demand for Bitcoin grows, driven by adoption, investment, and economic instability. Its value is likely to rise, making it a potential store of value. Often likened to digital gold, historical price data supports this. In 2010, Bitcoin's value was negligible. So 10,000 Bitcoins purchased a pizza worth $25. In 2021, one Bitcoin reached $60,000, reflecting its deflationary appeal. Why governments can't kill Bitcoin? Bitcoin's decentralized and global architecture makes it nearly impossible for governments to eradicate. Here's why. The first one, it's a distributed network. Bitcoin operates on a network of thousands of nodes around the world. As of 2021, there were around 10,000 reachable nodes. As of 2025, it is more than 18,000 nodes, according to BitNodes, spread across multiple continents. Shutting down Bitcoin could require disabling all the nodes simultaneously, a logistical nightmare. Pseudo-anonymity. Bitcoin transactions are pseudo-anonymous, linked to cryptographic addresses rather than real-world entities. While not fully anonymous, these features complicate government efforts to track and seize funds, especially if users employ privacy-enhancing tactics like using new addresses for each transaction. Global reach. Bitcoin transcends borders, functioning wherever there is an internet connection. Even in countries with strict bans, uh, users can access Bitcoin via decentralized exchanges, VPNs, or peer-to-peer platforms like local Bitcoins. China tried it in 2021 but failed by banning the mining and trading, but it didn't work. Historical resilience. Now let's look at the China's ban. In 2021, China banned Bitcoin mining, causing a temporary drop in the network hash rate. Yet miners relocated to countries like US and Kazakhstan, and the hash rate recovered within months, surpassing 150 exahashes per second by late 2021. India's threats. India has repeatedly threatened to ban cryptocurrency, yes, Bitcoin trading persists through informal channels, demonstrating enforcement challenges. Now let's look at the community and the incentives. Bitcoin's survival depends on its users, miners, developers, and holders, who are incentivized to maintain the network. As long as individuals value Bitcoin's properties, it will endure. Government may restrict its use or impose regulations, but killing Bitcoin entirely is infeasible due to its decentralized, borderless nature. Now let's see why banks can't print Bitcoin at will. Unlike fiat currencies, where central bank are arbitrarily increase the money supply, Bitcoin's issuance is governed by its protocol, not human discretion. We can support this by the fixed supply. The 21 million cap is embedded into Bitcoin's code. Altering this would require consensus from majority of network participants, a unlikely scenario given Bitcoin's community value scarcity. Algorithmic issuance. New Bitcoins are only created through mining, with the block reward predetermined by the halving schedule. This contrasts with the fiat system, where central banks can print money without approval. For instance, during 2020 uh, COVID-19 crisis, the U.S. Federal Reserve increased the money supply by over 20% through quantitative easing, a flexibility Bitcoin inherently lacks. Decentralized governance. Bitcoin rules are enforced by its software and maintained by a global network of nodes and miners. Any attempt to inflate or supply would be rejected unless majority agrees, a process that protects Bitcoin's integrity. The rigid monetary policy ensures banks or any entity cannot manipulate Bitcoin supply, safeguarding its value against inflation. Now let's look at the negatives of fiat currency. Fiat currencies issued and controlled by governments and central banks suffer from systemic flaws that Bitcoin seeks to address. Below are key negatives supported by data and examples. First one is inflation. Fiat money's unlimited supply often leads to inflation, eroding purchasing power. US dollar. Since the Federal Reserve's inception in 1913, the dollar has lost 95% of its value. A basket of goods costing $1 in 1913 would cost $26 in 2021, as per the labor statistics consumer price index, which is also called as CPI. Now let's look at some hyperinflation examples. Zimbabwe in 2008. Excessive money printing caused inflation to hit 79.6 billion percent per month, rendering Zimbabwean dollars worthless. Citizens resorted to bartering or foreign currencies. Another example is Venezuela in 2010. The bolivar lost 99.9% of its value since 2013 due to unchecked printing, with annual inflation peaking at 1.8 million percent in 2018. The other negative thing about fiat is centralization. Fiat systems are centralized, giving governments and banks disproportionate control. The first one is the policy manipulation. Central banks can adjust interest rate or print money to suit political agendas, often at public expense. For example, US Federal Fed's quantitative easing since 2008 has disproportionately benefited asset holders, widening wealth gaps. Asset seizure. In 2013, Cyprus imposed capital controls and seized 47.5% of bank deposits above £100,000 to bail out banking system, highlighting fiat's vulnerability in government overreach. The next negative about fiat is lack of privacy. Digital fiat transactions are tracked by banks and governments, compromising financial autonomy. In 2019, the IRS forced Coinbase, a cryptocurrency exchange, to disclose data of her 13,000 users, illustrating how fiat system enables surveillance. Another negative of fiat is counterfeiting. Fiat currencies are susceptible to counterfeiting, undermining trust. The US Secret Service reported $146 million in counterfeited dollars in circulation in 2020, despite advanced security features. Dependencies on intermediaries. Fiat's transaction rely on banks and payment processors, introducing fees and delays. Remittances. World Bank estimates a global average cost of sending $200 internationally is 6.8%, a burden on migrant workers. These flaws expose fiat's fragility and its reliance on centralized trust, which Bitcoin circumvents. Now, let's look at some of the positives of Bitcoin. Bitcoin offers a compelling alternative to fiat with advantages rooted in its design. The first one is the deflationary nature. Bitcoin fixed supply position it as a hedge against inflation. Price growth from $0.0008 in 2010 to over $60,000 in 2021 to $84,000 in 2025. Bitcoin's value has soared, reflecting its scarcity and demand. While volatile, its long-term trend supports its store of value potential. The next positive about Bitcoin is its decentralization. No single entity controls Bitcoin, reducing risk of censorship and manipulation. Node distribution. Over 10,000 nodes as of 2021 and 18,000 nodes as of 2025 to ensure no central point of failure as per BitNodes. Transparency and security. Blockchain provides an immutable public records of transactions. Proof of work. Bitcoin security relies on miners complex solving problems with a hash rate exceeding 800 exahashes as of 2025, making attacks prohibitively expensive. Unhacked core. Despite exchange breaches, Bitcoin's core protocol has remained secure since 2009. The next great positive thing about Bitcoin is its privacy. Bitcoin offers pseudo-anonymity, enhancing user privacy compared to fiat system. Users can generate new addresses per transaction, obscuring their identity if used carefully. Another great advantage of Bitcoin is global accessibility. Bitcoin operates without borders or intermediaries. The first one is the remittances. Bitcoin transaction can cost less than 1% of large amount compared to fiat 6.88% as per the World Bank data. Unbanked. With 1.7 billion adults unbanked as of 2017, Bitcoin provides financial access via smartphone and internet. The last great advantage of Bitcoin is immutability. Confirmed Bitcoin transactions are irreversible, preventing fraud or double spending. Now let's look some of the data and examples strengthening the case for Bitcoin. The first one is the inflation contrast. The US CPI rose by an average of 2.5% annually over the past 20 years, though the real cost suggests higher inflation. Bitcoin in its inflation rate is 1.8% as of 2021, and it's dropped to 0.8% in 2024, and will reach 0% by 2140, far below Fiat's target. Adoption in crisis. Venezuela ranked third in crypto adoption globally. Venezuelans use Bitcoin to escape hyperinflation. Nigeria. Peer to peer Bitcoin trading hit $40 million weekly in 2021 amid Naira's devaluation. Economic hedge. In 2020, Bitcoin rose over 300% while stock markets faltered, drawing firms like Strategy and Tesla. Network resilience. Post China ban, Bitcoin's hash rate increased to 800 exahashes as per blockchain.com. Real world use. El Salvador adopted Bitcoin as a legal tender in 21, reducing remittance cost, which came to around 10% of GDP, and dollar reliance. Now let's look at some of the challenges that are faced by the Bitcoin. The first one is the volatility. Bitcoin's price swings deter some users, but long-term holders see gains, and maturity may and as it matures, the prices may stabilize it. Scalability. It is limited to 7 transactions per second. Bitcoin faces high fee during congestion. Lightning Network, which acts as layer 2, promises faster and cheaper transactions. The third one is regulatory bans. For example, China, India, and many other countries who are trying to ban Bitcoin, but things are changing. And challenge adoption. Yet Bitcoin persists due to decentralized resilience. Many of the countries are slowly coming out telling Bitcoiners need not pay taxes for their cryptocurrency gains in order to attract them as their investments. So, to conclude, Bitcoin's decentralized deflationary design offers a robust alternative to fiat currencies plagued by inflation, centralization, and opacity. Its fixed supply, global reach, and resilience to government or bank control empowers individuals with financial sovereignty. While challenges like volatility persist, Bitcoin's growing adoption, evidenced by over $1.7 trillion as of 2025, and more than 68 million wallet users, signals a shift towards a new monetary paradigm. As fiat system falters, Bitcoin stands as a revolutionary protocol poised to redefine money.